Hello and good morning. It is March 19th at 8:14 in the morning my time, and I'm looking to go on a short here on NQM2026. It is the next in line contract as it has the higher open interest now. We do have until the 20th for NQH, but since this one has the more liquidity already, this is the one you should be trading now. In the orange box, I have delineated an order block I want to see respected. The blue line is liquidity previously just taken, and there I've entered fair value gap, inefficient fair value gap delineated in the blue rectangle there. Therefore, it can skew past the parameters just a bit. Risk is acceptable here, and I'm going to be targeting the relative equal lows there. First presented gap right there in the quadrants delineated below. Let's see if the market wants to reach down there, but I have those two minor sell side levels as my targets first. A partial will be taken today. There. You can see it violated the fair value gap right there on the wick. Did not close below it, but violated it. And right there, since it wicked up, had another wick, and then a candle body, followed by another wick down. I want to see that traded range be treated as a block that price doesn't want to reach back into. Nice delivery so far. I'm going to treat that gap as a breakaway. I'm sorry, not breakaway, but what I don't want price to reach into to show me strength to continue downside. Partial taken at the break of that low. With the remaining contract, I'm going to let ride to hit my limit order down there. Mm. I'm going to be reading you some of my notes that I'm taking at the same time as the market unfolds. My bias is still bearish to lower delivery of price. But these are elements that support my bias in the retraction of the economy. So here we have Atlassian lays off 10% of the workforce, 1,600 employees, 640 in North America, while the rest are international. Yamaha moving its headquarters out of California after 50 years of residency. Larry Ellison of Oracle has moved to Florida. Two of the original Google founders have left California. Supernal lays off 80% in the Los Angeles area, which is a transportation company. Block A finance company lays off 4,000 or 40% in this SF Bay Area. eBay in the SF Bay Area lays off 800, 6%. C3.ai lays off 280 or 26% of its workforce in the SF Bay Area. So we continue to see retraction in the tech sector, especially. AI is truly, I don't know if it's AI 100%, but they are trimming clearly. Continued conflict in Iran with fuel and energy infrastructure being targeted can only produce negative effects, as we can see and feel at the pump. And CL1, which is crude oil futures, looks to want higher prices still. I had a price target of 126 as a possibility, and I think that could be even on the low end. With the potential of 140. And DXY also has a potential to a higher inefficiency range over at 103. So my question is, since this last futures trading contract spent a large majority of its life in a consolidation range, will this decline be quick now for this newly opened contract? And there in the blue, I have delineated that bearish candle as another block. I want to be respected for lower price delivery to my target. You can see the wicks trading up into it but not reaching consequent encroachment. I have moved my stop loss to the median threshold or consequent encroachment of that leg down. There is potential for price to reach back into that range, that one-sided delivery. And at this point in the trade, I want order flow to be respected. See how we're not getting candle body closure? Respect. And now it's looking like a good probability that that sell side price target will be tapped into. And there we have it. Limit order filled, trade closed. Very nice delivery. Very nice take.